This week, a major institutional voice just let something slip, and it completely reframes why Bitcoin's price action has felt so weird. Because while everyone's been staring at the chart, Bitcoin tagging 126K, then grinding down the 80Ks, something hasn't been adding up. And trust me, I feel it. I've got a baby on the way. I've got furniture bookmarked on my browser that I want to buy, and Bitcoin is out here acting like it doesn't care about my nesting timeline at all. But jokes aside, this doesn't feel like a normal pullback. It doesn't feel random. Buried in that institutional comment is a clue about why Bitcoin keeps stalling near 125K. Why rallies fade right when conviction peaks, and why this week's price action might not mean what most people think it does. I'm Sophie, welcome back to Satoshi, let's get into it. First off, let me address the $1 million question, or should I say $88,000 question. Is Bitcoin's price being manipulated? If you've been watching the charts, you know something feels off. Watch this clip because what gets said towards the end changes how you interpret every dip we've seen from 126,000 down to the 80Ks.
I think we need to get back to what is the purpose. What is the purpose of Bitcoin? Then we get into stablecoin. Bitcoin is an asset of fear. When you're less fearful, like we had a trade agreement with China, you saw a shift downward. There is conversations this week that there may be some type of settlement in Ukraine. Bitcoin fell a little bit. So you own Bitcoin because you're frightened of your physical security. You own it because you're frightened of your financial security. The long-term fundamental reason you own it because of the debasement of financial assets because of deficits. And so to me, even the movement in the last week, and we've had a 20-25% drawdown, you see these shifts, and they're actually pretty non-correlated shifts, and so the role.
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90-some-odd thousand, you're saying
if you bought it for a trade, it's a very volatile asset. You're going to have to be really good at market timing, which most people aren't. If you're buying it as a hedge against all your hope, then it has a meaningful impact on a portfolio.
Okay, Uncle Larry has definitely been sleuthing on Bitcoin Twitter because he's starting to sound like one of us, and I can't even believe I'm saying that. What is he doing?
He's beginning to believe.
But the signal is clear. Rallies fizzle out at key levels. Dips get bought up just in time. And it's like the market's playing pinball and we're the ball. And this isn't some shadowy conspiracy. It's cold, hard market mechanics at work. And the key players, option dealers and big institutions hedging billions in derivatives. Take a look at this chart. It's the smoking gun. This shows the open interest for Bitcoin options expiring on December 26th of this year. Blue bars are calls, yellows are puts, and those red dots, total intrinsic value. We've got a staggering 268,267 contracts outstanding, 194,801 calls versus just 73,466 puts, giving a put to call ratio of 0.38. That's bullish asymmetry, right? The notional value, over $23 billion. That's more than 1% of Bitcoin's entire market cap vanishing in a single day. And the max pain price, the level where these option holders lose the most, 96,000. Dealers have every incentive to pin the price around here and maximize their profits and minimize their payouts. Now, let's look at some of the traders and Bitcoiners on X who are calling this out. At No Limit Gains sums up the ruthless games being played out with this tweet. Options don't just sit there. Big whales hedge them, and when there's heavy positioning around certain strikes, price starts getting pulled towards liquidity. And he's spot on. This is why we've seen chop, fake outs, and those wicked stop hunts. Price grinds up, gets rejected near call wall, dumps, and buyers step in before it crashes too far. And then there's at David Eng MBA, who's been threading the narrative like a pro. In one post, he warns of a $450 million gamma flush over the next week, calling it a double-barreled liquidity event that will wipe out 67% of the entire derivatives board clean by December 26. Gamma, for those new to this, is a super simple way to measure how much work options dealers have to do to keep their bets safe as the price of Bitcoin moves. Imagine you're selling lemonade, but you promise some kids that if the price of lemons goes up a lot, you'll give them free lemonade to make up for it.
Fresh squeezed lemonade! I'll have some lemonade. Certainly, that'll be $2. But I've only got a quarter. Then I guess you're going thirsty, loser.
To protect yourself, every time lemon prices jump a little, you have to quickly run out and buy more lemons to protect yourself. The faster and more you have to run around buying lemons for every tiny price change, the higher your gamma. Right now, it's creating a cage around 85 to 90K, and we've seen that because the price of Bitcoin literally hasn't moved between 85 and 90K. Seriously, 88K is like the bane of my existence. Dealers sell into rallies above 89K and buy dips below 87K, keeping us totally trapped. So what's the big deal on December 26th, this date I keep mentioning? The big deal is that $415 million aggregate pin releases, and the structural price suppression is gone, opening up the path to a much higher range of Bitcoin price. Let's say Bitcoin's fair value price using the power law is about 118,000. We now have a 30,000 plus discount per coin. That spring is coiled, and when almost 50% of the gamma vanishes, the gravity of 85K loses its pull, and the call wall at 90K crumbles. Dealers stop hedging against us, and instead the market flips to ludicrous mode. You know what else is ludicrous? My data broker report. This is 11 pages. 11. They know every old address I've lived at, phone numbers, family members, even what kind of car I drive. It's insane. That's why today's video is sponsored by Aura. Scammers, spammers, even stalkers can just buy your personal info, and it's totally legal and so dystopian. Aura hunts down the data brokers selling your info, gets them to take it down, and keeps it off automatically. You don't have to go full off-the-grid Bitcoin mystic and live in a Faraday cage because Aura lets you keep your modern life and your privacy. Aura has packed it all in. Real-time dark web and fraud alerts, a secure VPN, antivirus, password manager, 24/7 US-based support, and $5 million in identity theft insurance if anything goes wrong. No other privacy service gives you this many tools for the same price. Protecting your Bitcoin in self-custody is necessary, but protecting yourself, that's non-negotiable. Go to aura.com/simplybitcoin and take your privacy back. All right, Aura protects you, but now let's talk about protecting your Bitcoin future, because stacking sats gets a whole lot easier when your miners are working for you and not against you. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoin first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, no worries. Saz doesn't tack on the extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on clean and simple revenue share. They only earn Bitcoin if you do too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining actually proves it. Let's just say if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing.
I think that there's just like this existential crisis in the market that's happened amongst some of the Bitcoin buyers and then that's like, we're at the worst of that. Like, that's shifting out. I think the retail investors who are like here for like very quick number go up, like that investor profile has shifted a lot. And now we have a lot more people that are just coming into Bitcoin because they think over the next 3 to 4 years, they can, triple or quadruple their money. There's a lot more investors like that are entering the market. I think that we had a lot of leverage flushed out. And even before this decline, leverage, I think, was like relatively low to prior cycles. We put out this banking report through Epoch, and I put a chart in there just kind of like comparing proportions of leverage to market capitalizations of assets in the system. And like, if you look at what happened in like broader crypto during the prior cycles for leverage expansion and like where we're at with Bitcoin today, it's significantly lower, like less than, I think it was close to like 40% of that amount. And I was kind of expecting more of that to come in, but I think with this crash, like even more of that got flushed out.
Yeah.
And we're like below general like leverage of like, broader securities markets. So I think a lot more of that could start stepping back in, particularly when banks start lending a lot more, which I expect to happen over the next year. So it's like leverage can be expanding a lot more of that, could be retail driven. I think that, with like a lot of those factors combined, it's healthy is kind of how I'm looking at this. There's a lot of just like very healthy characteristics that have come in. And the funniest part is like, nobody knows why we're having this crash. Like, that's like the funniest part of this. So it's like, you literally can't even come up with a good reason for why it's happening. So buy the shit out of it. Like, what are you doing? It's that easy.
So think about it. These legacy finance dinosaurs, banks and institutions, they're harvesting premiums by selling calls and puts, essentially betting on boredom. They're the ones that are creating this push and grind, trapping Bitcoin like a rat in a cage with all of their reindeer games. Okay, maybe that was too many animal metaphors, but you get the point. And here's the irony. They're playing checkers while Bitcoin is playing 4D chess. Once these options expire, their suppression tools evaporate. Building a new gamma wall costs time and hundreds of millions that they won't rebuild overnight, especially not over the holidays.
We hit 125. Everyone was super excited. Their dopamine started firing, and then we had to pull back. Why did we have to pull back? I knew we were going to pull back because there was a CME. There was a CME gap that would have been created if we hadn't pulled back. TradFi drives Bitcoin now, right? And when a TradFi drives an asset, you're going to have to follow the rules that TradFi sets.
So what does Bitcoin look like after the December 26 release valve? We've seen this before. Post-expiry, volatility explodes and Bitcoin snaps back to its trend. Sources like Bloomberg and CryptoSlate are already warning of rising volatility ahead of this $23 billion unwind. Calls clustered at 100,000 and 120,000, that's bullish positioning screaming for upside. And if we flip the gamma level at 88,500, dealers switch from selling to buying, fueling a squeeze. The vacuum to $118,000, Bitcoin's mathematical fair value, pulls us higher. And with ETF flows ramping up and no more dealer counterflow, we're talking aggressive moves into January. Happy New Year! Before we wrap up the show, let's bring this home with this special message from our friends at Ledn. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, 0 penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap this up. Of course, nothing's guaranteed in Bitcoin. Always do your own research and manage your own risk. But if the data holds, we're on the cusp of something epic. Bitcoin doesn't care about the holidays. It just keeps on winning. So if you found this breakdown eye-opening, smash that like button, subscribe for more unfiltered Bitcoin truth bombs, and hit the bell so that you don't miss our next video. Do you think December 26th sends us back above 100,000? Let's discuss. Drop a comment and let me know. I'll see you in the next one. So remember to stack, slay, and stay bullish, baby. Happy holidays.